Another day, another wall of red. Markets around the world have been shaken by a perfect storm of the coronavirus and an oil shock. Just a few minutes ago, the NZX closed down 194 points, or about 1.7%. That's better than this morning when the NZX Top 50 was down around 5% in early trading. Mackenzie Smith reports.
It's been a long 24 hours for global markets. London's FTSE down more than 7%. On Wall Street, where it was meant to be the anniversary of the US stock market's longest ever bull run, a trading halt was called, a first in more than 30 years. When the day was over, Wall Street had suffered its biggest one-day loss since the 2008 financial crisis. A financial advisor to global investment company Allianz, Mohammed Al-Arian, says recessions around the world now appear inevitable.
We're going to have recessions in many countries. That includes Germany, Italy, Singapore, Japan, and that list is going to get longer. Korea. The United States, it's still a 50-50 situation, but if the market disruptions continue and if the coronavirus fear amplify, then unfortunately we will.
The dramatic slide followed weeks of economic fears over the spread of Covid-19, but it was tipped over the edge by an oil price standoff between Russia and Saudi Arabia. By Monday, oil prices had posted their biggest fall since the Gulf War. A managing director at investment company Eurasia Group, Robert Johnston, says there's now a glut of oil production that could last a while.
The bottom line is we have a big imbalance in the oil market. We're going to have the first year-over-year demand correction since 2008, 2009, and we have too much oil. So where will the adjustment come from?
Locally, the effects have been immediate. And good news for drivers. Petrol prices at the pump dropping suddenly and sharply. Z Energy has cut petrol prices at 90% of its Caltex and Z service stations by up to 7 cents a litre. Energy and Resources Minister Megan Woods says she'll be keeping an eye on petrol companies.
We're seeing, I think, a 37% decrease in the price of crude this year in New Zealand. We know how quickly prices going up of crude are passed on to motorists, so I'll be looking to see that those savings are also passed on to motorists.
Aucklander Peter Fahey is enjoying the cheaper prices.
I just can't understand what's exactly happened, but it's certainly made a dramatic effect overnight, I notice.
But Mr Fahey is also worried about his personal investment fund as shares drop. Financial advisor Martin Hawes says most KiwiSaver funds will be facing reduced funds due to the market upheavals. But he says those unhappy should invest in less risky schemes. And it's not all bad news.
This whole downturn presents an opportunity for KiwiSaver funds because when this shakes out, it'll actually be really good for equities. We'll be left with very low interest rates. The world will continue on a growth trajectory. It's not Armageddon.
Economists here are forecasting a recession, though different from that of 2008. Westpac senior economist Michael Gordon says this will likely be more conventional.
No two recessions are the same, but this is likely to be in the form of a consumer-led slowdown, and that will have consequences. There will be business failures, as there are in any normal recession, but does it lead to the point where credit markets lock up because no one knows who to trust? That was quite a unique scenario.
Business confidence in the first week of March has certainly fallen. The preliminary ANZ Business Confidence Survey out today indicates all key activity indicators fell from February, including prices. And provisional trade data for February released today has confirmed exports and imports to and from China dropped last month. ANZ Chief Economist Sharon Zollner says firms' own activity is at the lowest in 11 years.
We saw every indicator fall. What was encouraging is that employment intentions and investment intentions, while they fell, they've slipped back to where they were around August and September last year. The one indicator that really fell out of bed was export intentions. That was the lowest it's ever been, including the GFC period. So that was certainly one out of the box.
The Chief Executive of Business New Zealand, Kirk Hope, says those reliant on industries like tourism and forestry will be hit hardest.
Some of those businesses, they will already shut their doors. Others will be continuing to operate because they're able to tap into local demand, but they will be doing it tough.
Local retailers are also expecting things to get worse. A survey of Retail NZ members found 70% expect to have cash flow difficulties and 30% have already cut staff hours. Retail NZ Chief Executive Greg Harford says discretionary spending is one of the first areas to be scrimped on.
Our sense is that some customers have indeed lost incomes, lost livelihood over the last few weeks. That's just made people a little bit nervous, and if people don't need to spend, they're stopping.
Business New Zealand's Kirk Hope says government initiatives to support businesses are positive and anyone affected should talk to their bank and the IRD. For Checkpoint, Mackenzie Smith.